In the fast-paced world of finance, the ability to distill complex analyses into concise, compelling pitches is an invaluable skill. The elevator pitch, a concept borrowed from entrepreneurs, has found a critical place in the toolkit of investment analysts. This essay explores the art of crafting ultra-short, high-impact stock recommendations that can be delivered in 30 seconds or less. The essence of the elevator pitch in finance lies in its brevity and potency. It's about capturing the core of your investment thesis in the time it takes to ride an elevator. This skill is crucial not just for chance encounters with busy fund managers, but for cutting through the noise in a world of information overload. Consider the case of Tesla in early 2020. A succinct bull pitch might have sounded like this. Tesla is not just an automaker, but a technology leader poised to dominate the rapidly growing electric vehicle market. With superior battery technology, strong brand loyalty, and expanding production capacity, Tesla is positioned to capture significant market share as the world transitions to sustainable transport. The stock is a buy with potential for 100% upside in 12-18 months. This pitch encapsulates the key elements: the company's unique positioning, its competitive advantages, the market opportunity, and a clear recommendation with a specific target. It's designed to pique interest and invite further discussion. On the flip side, a bearish elevator pitch on WeWork before its failed IPO in 2019 might have gone, "WeWork's business model is fundamentally flawed. It's a real estate company masquerading as a tech startup with unsustainable losses, questionable corporate governance, and vulnerability to economic downturns. The valuation is detached from reality, and the company faces significant risk of failure without a major restructuring." This pitch quickly highlights the key red flags, challenges the company's self-portrayal, and provides a clear warning to potential investors. The art of the 30-second pitch lies in several key principles. Start with a hook. Begin with a statement that immediately grabs attention. For instance, Amazon is not a retail company, it's the infrastructure of commerce. Focus on the unique. Highlight what makes the company or situation special. When pitching Apple, you might emphasize its ecosystem lock-in and high-margin services business. Quantify the opportunity, use specific numbers to add credibility. For example, the cybersecurity market is projected to grow at 15% annually, reaching $300 billion by 2025, and CrowdStrike is poised to capture a significant share. Address the why now, explain why this is the right time to act. In pitching Zoom in early 2020, you might have emphasized the sudden shift to remote work due to the pandemic, and then end with a clear recommendation. Always conclude with a specific action and potential outcome. Buy NVIDIA with a 12-month price target of $800, representing 40% upside. The key to mastering the elevator pitch is preparation and practice. It requires a deep understanding of the company and sector, allowing you to distill complex information into its essential elements. It also demands an awareness of your audience. A pitch to a value investor will differ from one aimed at a growth-focused hedge fund manager. Consider how differently you might pitch Microsoft to these two audiences. For a value investor, Microsoft's cloud business, Azure, provides a stable, high-margin revenue stream, complementing its dominant position in enterprise software. A strong balance sheet and consistent cash flow offer value and growth at a reasonable price. For a growth investor, Microsoft's Azure is gaining market share in the rapidly expanding cloud computing market, positioning the company for sustained double-digit growth. Its AI initiatives and gaming division provide additional high-growth vectors. In conclusion, the 30-second stock pitch is a critical skill in the modern financial landscape. It forces analysts to focus on what truly matters, to articulate their insights clearly, and to capture attention in a world of constant distractions. By mastering this art, analysts can more effectively communicate their ideas, influence investment decisions, and ultimately drive their careers forward. The elevator pitch may be brief, but its impact can be profound.